There we go. Welcome to another episode of the Highett-Smith podcast. Thank you very much for joining us. So today I'm very excited to have Ivan Tejeda joining me. We're talking about carving out a business from a large organization, sort of in a leveraged management buyout under private equity. It's quite a intense process. And Ivan, I mean, we talked about this when you were going through that process as well. It's not something that a lot of people necessarily actually go through successfully and sort of come and survive the other end. So I thought it was really interesting that we get to talk about this topic with you. But for people that don't know you, Ivan, perhaps give a little bit of a background, a little bit of an introduction to yourself, please.
Okay. Well, thanks very much, first of all, for inviting me to the podcast. Very excited as well to participate in this new initiative that you put together. A bit of my background. So I grew up in Spain, and a few years ago, only a few years, a quarter of my life already, I've lived outside of Spain. I left first to the UK, where I started my career. I spent over there 8 years. And started working in the finance area for various different companies, and then I started working with Emerson Electric at the time there, who proposed to me to move to Italy. So I spent where I spent 3 years of my life, a great 3 years. It was at a time where things were going pretty well. It was 2008. So I moved there in June 2008. If I recall correctly, September 2008, like the collapse of Lehman Brothers.
All changed, that's right.
Right. So what it was supposed to be, a mission of, finance. I was at the time in charge of the planning and analysis of the division that we had in Europe. So what was supposed to be like a growth plan, and it was going to be a great, we were all working, and it was early days in the data center business, but it was very promising already at the time.
Yeah.
So we thought it was going to be a great, but obviously financial institutions being a big consumer of data centers at the time, the whole business went into a standstill pretty much. So what became a growth plan very quickly transformed into a kind of restructuring plan. So different mindset altogether. And then in 2010, Emerson acquired a company called Chloride, a UK company at the time, quoted in the stock exchange in the UK. And they had, purely it was a competitor for Emerson in that space of data center. And they had this little business in Lyon, in France, which was all, uninterrupted power supply, which was the product they were selling, same as the data center, but it was mainly in the industrial space. And when I mean industrial space, anything to do with energy production, whether it was nuclear, oil and gas. So the cycle was completely different. So big challenge because you had to integrate the company into Emerson at the time. And at the same time, Emerson had to understand this kind of business, which was very different from what they have seen in the UPS market. So I spent 5 years with them integrating, making the business grow. And within this 5 years, we did a lot of stuff, merging two companies we had in France together here in Lyon. We grew the business significantly in the US, Asia as well, and Latin America, as well as the EMEA, which was the core business at the time. We went also through a crisis. This time it wasn't the financial crisis, it was the oil and gas crisis, I think around 2013, roughly. So the price of the barrel went down. So we were exposed to that. About 30% of our business was exposed to that. So big chunk of the business. So, and again, so you move from a growth plan into kind of a restructuring plan. And then in 2015, Emerson 14, they already decided to sell their division called Emerson Network Power to private equity. And I continue my journey with Emerson, went to a little town south of Paris called Chartres, in a completely different business, a very interesting business, which was all about growing the business. It was a business that was really diversified, and the biggest challenge they had was to make significant growth. If they were able to make it 2% growth, it was already almost like a startup, right? Growth. So the challenge was to find ways to make this business grow, and obviously part of that was acquisitions, which we ended up doing in 2018. A German company called Aventix, which Emerson purchased from a private equity. And then in 2019, I was called back into the region of Lyon, where I'm based today, to join a company called Lennox. Lennox, which are in the HVAC and refrigeration market. And the mission was really to revamp and to relaunch again the company. A little bit of restructuring to be done there, but obviously COVID came into the way, and I guess we know the rest of the story.
Yeah.
The interesting part is that during this COVID time, I had my old colleagues from Chloride that reached out, because the company that was formed from that spin-off from Emerson, they were trying to focus on the core market, which was the data center and the telecom. And this industrial piece for them didn't make more sense, so they wanted to sell it. They have been trying for quite a bit, because I think they started the process in 2018 with a few people that were interested, but they never reached an agreement. And in 2020, just in the middle of the COVID, we decided, as crazy as we were, we thought, well, let's put an offer together and let's shoot that to the US and see what they think. And we were not the first option. There was an industrial company that was the first option for them. And as a matter of fact, they gave them the exclusivity in 2020, end of 2020. And then in the beginning of 21, they came back to us, and the exclusivity of this industrial company reached an end. And they came back to us and said, well, now you got your chance, so you can do it. So in between, we have been working with, trying to find the funding to get to buy the company. So we talked to banks, private equities, and so on. So we were pretty much ready.
It's a long old process to get to that stage. That takes a lot of, I suppose, resilience and desire to make it happen, because it's not just have an idea, let's get some funding quickly and execute. There's that's sticking around. Talk to me about those early days, because that's really fascinating.
I would I'd say that it started as an idea. So it was one of my old colleagues that reached out to me. So we were just having a lunch, At the time, it was you go into a restaurant, still with the mask and all that stuff, the gel, and to clean the hands 1,000 times. So he was kind of okay. What if we would do that? How we would approach this, right? And I would say, luckily, more, at least in France anyway, you have company. Well, not I would say a company. It's this institution called BPI, which have very much it's a big support for entrepreneurs. Yeah. And it was pretty much thanks to them that we started getting the network and the right people to talk to. And we found this guy that was doing M&A for MBOs, because the four other guys, obviously, they were still in the company. I was outside. So you could qualify that as an MBO. And he was pretty good advising us, but obviously it took a lot of learning also from our side. We were, all of us were coming from corporations. Yeah. Where we didn't know what it was the enterprise value or the equity. We had to learn that as we were going, right? So a lot of study and understanding how do you calculate the value of a company, and how do we put a value to the company. So I would say luckily we were very well advised by this company, Ami Capital, our law firm as well. So we also had a lawyer that was pretty good as well. was helping us quite a bit into how to determine the value, how to approach the US.
Mm.
So no, I think that was the interesting part, and the I guess the most tricky part in all this is to deal with the cultural difference between a US corporation and what it happens in France, basically, right?
Yeah, absolutely.
Just a silly example that I would give you. Obviously you had the midterm in the UK, and so they have here in France, but the US don't have those things, right? So
Yeah.
we got the exclusivity. I think they gave us the exclusivity end of January. Obviously, in February, you had about 2 weeks where banks and people are not around, right? People are actually spending at least 1 week anyway. They tend to go to ski, and
Yeah.
that was hard to describe. And I guess the hardest one was the summertime. Yeah,
Yeah, of
for
course.
the US, it was like, okay, in July we're gonna have this done, guys, and that's it. And we were like, I don't think it's gonna happen in July. It'll be hard to find the bankers and the lawyers and the accountants and everybody else, here in France available during that time. So, they were very understanding as well. I would say
Yeah.
Vertiv, the guys, they were, they knew they wanted us, they wanted this company to belong to the employees,
Yeah.
so to the managers that launched that, and myself as well coming into the game. So they were very accommodating as well. So
I was going to say, how did you manage those stakeholders? Because they want to get things done quickly. There's different challenges, different geographies that you're dealing with. Keeping everyone on aligned on the same page can be a challenge.
it is a challenge. I think what was very helpful for us is that within Vertiv we only had one point of contact.
Mm.
So it was the guy that we were addressing all the questions to him, and he would address the questions to us. So and within us, we were distributing the questions as good as we could. Now I must admit that from my side, I was still working in Linux, so it was kind of hard to chip in and help out into the whole process. But I did as well as I could. But the guys that were in the company, they were pretty. It was pretty intense for them because they were trying to work to keep running the operation, and at the same time running the whole process of selling the company and selling the company, trying to keep kind of an unbiased set of mindset, right?
Yeah.
Because you're selling the company to yourself.
Yeah. Well, I was going to say, it's very easy in those times. I've seen it before with different organizations to lose focus
Right.
because you've got, your BAU, your business as usual type of work, got to try and, fulfill orders, meet new customers, etc.
Right.
Plus, you're going through a sales process which take, all the due diligence, fundraising, legal, all of this other stuff that goes around it. It's a difficult juggling act.
Right. Yeah, and it was a bit of that as well because it came at a time where Vertiv was also, as many corporations do, you do a travel ban and people cannot
Mm.
travel, and you're trying to contain costs and so on. And so for us, it was very important that we wouldn't stop our associate, the tech. Today he's in charge of the sales, so it was very important not to stop him too much, because we wanted to continue to develop. And the big challenge that we had in this carve out was the fact, or I would say, and one of the biggest arguments that we had, it was we wanted to reconquer the territories where we already were at the time of Emerson.
Mm.
Between Emerson and when we bought the company, we moved from a truly a global company. So we had an operation in the US. We had quite a lot of work in being done in Asia, in India, in China. We had a lot of in Latin America. By the time we bought the company, we were only limited to EMEA.
Oh.
So all the US business was, I would say, for the lack of a better word, abandoned.
Mm.
Latin America was the same. And Asia was abandoned within the process. So we were going through the process, and then they decided to basically take out the whole team that they had in Asia related to this industrial space. for obviously for the good reasons that they had. Obviously, they wanted to save money, and there are always good reasons for this. But for us, it was a big challenge.
Yeah.
We wanted to make sure that Asia being one of the areas where there's a lot of potential, the US as well. So we wanted to keep that going somehow. So it was a big challenge to keep the focus there, to also persuade the US company that they should still let our guy travel and go around and go and visit customers. Obviously, all the investments to do with the factory and so on, obviously that was all down to zero.
Yeah.
Um,
Did you find some of that tension between, Vertiv and what you were trying to carve out, and almost not in terms of competition, but almost in terms of distrust? Well, we don't want, you're leaving us, we don't want to allow that sort of thing. Or, I don't think, yeah, tension is the right word,
yeah,
I think.
yeah, there were a few points. There were a few points that caused a little bit of tension. Well, the first one was the brand. Even though they don't have Vertiv today and before anyway, the chloride brand was only used by the industrial
Mm,
part of the business. So originally the proposal was okay, let's give you a license for the brand, but we keep the brand. Which we argue that there was no point then for us to, it's almost like buying a company without a brand. So we wanted to keep the brand,
yeah.
which they accepted. I think they were very reasonable with that as well. They understood that they didn't really need that. There was some technology as well that was actually being done particularly in India, where you could use it for what I would call the data center standard, or let's say light industrial, which is
Mm,
one area where Vertiv they also play, and that we play as well.
yeah.
So they wanted to keep that part of the technology. But I think overall, I think and the other part was the ERP system.
Yeah.
The ERP was a big challenge for us because obviously we learned that through the due diligence, and I guess for the benefit of the audience, you obviously when you're looking for funding for this kind of projects, you haven't done the due diligence yet.
Mm,
Right? You're kind of explaining the project, how the project is going to work, the areas where you see the business growing,
yeah.
and where how you can grow the business. But obviously, when you're in a carve out, you get a lot of unexpected things, and the
Mm,
ERP was one of them. ERP being common to the entire Vertiv.
mm,
The database, I would say, whether it was products, whether it was a bill of materials, whether it was customers, suppliers, it was all common.
yeah.
So to clone that and move it into a new instance, it would mean you basically recover all the data that Vertiv has and put it into, even though the chances that we would have used the information, they are slim. But understandably as well, Vertiv, said no, you
Yeah.
cannot do a copy paste and just put it into your own instance. So what it meant is that we had to change the ERP system,
Mm,
which is a pretty intense. I mean, like many people probably in the audience will recognize, it's a pretty intense process.
yeah.
And particularly when you're trying to deal with the rest of the carve out, and on top of that, you have to change the ERP system. In a production facility is quite a dramatic change. So
It's why, and I've spoken to different investors, they tend to, stay away from carve out opportunities just because they see it as too complex for them. They're like, I know some investors, they just want simple, here's equity, here's money, that's it. They don't want any of the stuff that goes around it,
right.
because of that complexity. So what surprised you the most when it came to actually the real work of kind of starting to separate off?
I think the biggest surprise for us was so to give you first a bit of background. So we had a company in Lyon that was fully standalone company. So that was, let's say, a spin-off.
Yeah.
The biggest challenge there was really to change the ERP system and to move the production facility that was in a common manufacturing facility in Slovakia, moving that out, taking that out of Vertiv and moving into our own facility, and we had to decide that. But I guess those things, we've done that through, in my corporate life, we've done changes of ERPs, and so it's pretty painful when you've done that. I think what it was very, I would say two things were very, very surprising. One, when you moved, so then we had asset deals in different countries, and we had to create the company from zero, from scratch, transfer the employees' contract. So that pretty much, for the most part, went pretty well. All the employees accepted that. But what was interesting to see was the reaction of the banking industry into all this. Banks, you can tell them, hey, we used to be an activity of Vertiv, and Vertiv, you've been working with them for many years, so we want to open a bank account. Well, as an individual, we can open bank accounts very easily.
Yeah.
Right. When you're a company, the first thing they ask you is, all right, can you give me your last set of accounts?
Yeah, three years of accounts or whatever.
Right. I don't have anything. I've just bought a company, so and I just bought the assets. I haven't even bought any other thing. And in my assets, what we had in the countries was really people. Okay, we had some PCs and computers and some furniture, but apart from that, it was really people. So we were faced with fairly early in the process with the fact that it was pretty hard to open bank accounts. One would say, well, that's not a big deal. Well, it is a big deal when you have people sitting in the UK and you have to pay in British pounds.
Yeah.
And you are sitting in France, and most of your all your accounts are in euros. So quickly you have to start opening bank accounts in GBP. And then you have to find your way, basically. In Dubai, it took us about 9 months to open the bank account. And within these 9 months, to be able to pay the salaries of our people, that we were going through our accounting firm, and they were the ones doing the payment. So not easy because like I said, they don't really recognize the company. They even though they know the management, they know the people, but so you have to go through it and then use your leverage, and then you learn obviously how the banking system works in a way. And we were lucky to be supported. Obviously, our banks in France were very, very supportive. They couldn't do much about it because they were very much regional banks, mostly operating in France. But we were lucky to work with HSBC, one of the contacts that I had in the past, and they were very helpful in the whole process to open bank accounts in the different countries. For countries, we had Dubai, Turkey. Surprisingly enough, Turkey was probably the easiest one. So one could think Turkey is a complicated country. When it comes to investment, they're pretty fast.
Yeah, absolutely.
And Spain as well was fairly fast, even though the whole creation of the company in Spain was rather painful. I don't think I've ever seen so many. I've signed so many pages in my life, But the whole afterwards, getting the investment, using the banking system, that was pretty straightforward. The UK was pretty fast as well. Other than the fact that we had to have accounts in British pounds, but that one, for the most part, went okay. But it was surprising. And it's one of those things that you don't want to. It's not one of those things you want to face right when you do a carve out, having issues paying the salaries of your employees.
I was going to ask, it's one thing for the leadership team because you've been part of this process of buying the company, putting the plans together. You're very much bought into this, but you're also acquiring all the people that were maybe happily part of another organization, not having such a vested interest. What's that like, around that sort of culture aspect? Because like you say, you kind of move away from this established business with its own culture, and all of a sudden you're on your own.
Right. Yeah, it's an interesting process. I think we were fairly lucky that most of the people that were in this part of the business they were all in industrial. They love that business, right? Industrial business and how it works. So from that aspect, we were fairly lucky. But undoubtedly created a lot of I wouldn't call it anxiety, but it created some anxiety, so for people to understand that you are part of this conglomerate. This is well, at the time, Verti was $5 billion. Today is probably $6-7 billion, with different
Mm.
entities everywhere, fairly well managed. And all of a sudden you become a standalone company, which is, we purchased a 70 million euro company. So people their perception was, well, we move from a $5 billion company to a $70 million company.
Mm.
That's kind of the perception, right? Even though
Yeah.
they were always part of this 70
Yeah.
million dollar company. So that part was, it takes a lot of communication.
Mm.
It takes a lot of reassurance, transparency as well. Explaining to them that we haven't done this deal with the barely minimum. We have
Yeah.
some particular, trying to reassure people about the cash. The cash in the company is there. We have enough to run all the and to do all the investments that we have to do to carve out the business, but also to secure also the future of the company. So that was a challenge. That was a challenge. And obviously, when you go through this kind of process, your competitors, they know about it,
Yeah.
and they all of a sudden they start calling you people.
Yeah. And from customers' perspective as well,
Yeah.
I know the UPS market is competitive anyway. Uh, do they start trying to eat your lunch in that respect, in terms of
But
testing the waters
yeah,
with your customers to say, well, maybe you want to change, maybe they'll
yeah.
understand.
I think the customers in this business, they tend to be, very very loyal.
Mm.
Usually, unless there is a big issue, with the UPS.
Mm.
I mean, UPS usually has a 20 lifespan of 20
Yeah.
years, right? And as long as you're there when they need to do maintenance, and there are no particular issues, and even if there is any issue, if you get a good service and you get a technician that comes straight, because the things, the stakes are very high.
Yeah. Yeah.
Think about a nuclear plant today, that we're talking a lot about nuclear, right? It's producing electricity, and all of a sudden the UPS doesn't work. Um, it's almost like you have to basically evacuate the whole building.
Yeah.
I mean, that's as serious as it gets, right? Same for an offshore plant.
Mm.
If something happens in an offshore plant, you have to evacuate the platform, which means you send a helicopter, you take everybody out until you repair the UPS. So the availability and the reactivity when it becomes an issue, then when there is an issue, is very valued by the customers. And I think that was one of the strongest points of Chloride always, is that they've always been there for the customers when there was an issue, and we have this service mentality, that
Mm.
whatever happens, whatever it takes, we'll be there. We'll support the customer. But undoubtedly, yeah, I'm sure there are customers that and some customers, they were asking the question about, okay, hang on, so who are the shareholders now? Who is supporting this company? Show us a little bit the financial structure of the company, and suppliers as well. By the way,
Yeah.
I mean, suppliers that were used to deal with a big conglomerate, all of a sudden, they have to deal with the 70 million euro company.
Yeah.
They want to know. They want to know, and so it takes a lot of communication. I had to go personally to the central bank in France to explain to them, the new structure of the company, to make sure that our grade didn't go down.
Yeah.
So we could actually get, the credit companies
Yeah.
to keep a good note for us. So
Absolutely.
yeah, it's a lot of communication, a lot of
Yeah.
communication.
What about with the investors as well? Because obviously you need the finance to support this. Again, when I've spoken to investors about carve-outs, what I've always found is if someone's done it before, they're more comfortable with it because they understand the complexity. But investors are naturally quite an impatient bunch. What have you learned in dealing with them and under this carve-out scenario?
I think the learning part on this, I think you have to be very clear upfront. First of all, what is the cycle of your business?
Mm.
We were in a business that just by itself, let alone the carve out, but by itself, you play a customer places an order today. By the time that we're going to ship it, it could take between 6 to 9 months, even a
Mm.
year, right? So by the time that you actually see the any action that you may take, whether it is cost reduction in material or productivity, by the time you're going to see that into your actual P&L, it's going to take easily 12 months, if not 18 months.
Mm.
So you have to be very clear upfront onto how your business operates,
Mm.
because that can come as a surprise. I think on a normal circumstances, without carve out, it could also be a kind of a difficult to manage when you talk to the investors. If you add to that a carve out, that means that you're all of a sudden you're hitting a company like Chloride with two major transformations,
Mm.
ERP and moving a production facility. Production facility for Chloride, this business is engineered to order. So we don't have a manual to tell people how they need to build a UPS, right? Most of that comes from experience, and they have it in their head. So, and the operator that we had in the factory, they are not the typical operators. They need at least to know how to learn or how to read electric diagram.
Yeah.
So it takes time. It takes time, and I think that's something that probably we underestimated. To be honest, that communication, we probably didn't communicate enough on that, and it can become it can create some tension. I would say, and on top of that, obviously you are paying the double penalty, because when you're doing the carve out, you are still paying the TSA, so the transfer service agreement that you have with a company. But they are still providing you services like the internet, the email, the ERP that you are using, and that can be quite costly as well. So all of a sudden, your cash, can go quick. You are investing to get the new systems in place, and you're still paying, a significant fee to the corporation. And when that lasts for 18 months, that can create a bit of tension, which it did.
And it's not just taking all these things and rebuilding them, the systems, the factories, and so on. You've got the customers as well, and
Right.
you've probably got pressure from your investors on top saying, "Where's our business?"
Right. I would say for us, I don't know if I would qualify that as if he was lucky or not, but the actual market itself changed dramatically. Obviously, with the conflict between Russia and Ukraine, it created I would say a bit of a panic in the European governments as to how we're going to replace Russia in terms of our source of energy. So it kind of unblocked a lot of investments in areas like the Middle East, which we were present, but also in the US, in Asia. So it has unblocked quite a lot of investments. So the actual business was there. I think the biggest, and as a matter of fact, we moved from 70 million euros. We finished the first year 80 million euros, 83 million euros. So, which for an industrial business is quite a lot of growth. 30 million euros of growth is quite significant. On top of that, you had the nuclear business became, at least in France, became a green initiative. So all of a sudden, you have a business like the nuclear business that was supposed to be, everybody was supposed to get out. All of a sudden, you have to reinvest and kind of. So that was a lot of for us was quite a bit of a tailwind, and tailwinds are pretty good. But sometimes when you have the tailwinds, and all of a sudden you have quite a strong headwinds as well, because you have all the changes that you're doing, ERPs, factory, the whole investments that you have to put together, it kind of becomes it's quite complex.
Yeah.
So the customers, for the most part, the customers they understood that because the market was like that. Even our competitors, they were suffering from all that. They had all our factories were full.
Yeah.
So the actual lead time that we were giving to customers originally, which was 6 months, it went to 9 months, and then it went to 12 months. So they kind of understood all that. But from an investor standpoint, obviously that creates an issue, and I put that myself into that because I put my own money
Yeah.
into the company. So it creates a lot of concern
Yeah.
because you want to see it in the P&L. It's good to have in your backlog,
Yeah.
but you want to transform it into actual cash eventually.
Absolutely. I think you described it before as, doing the carve out and so on is like running a marathon and then you've got the investors asking you to accelerate.
Right, 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 and and you can understand. I mean, the point of view. Because for 2 years you're telling them, well, we're gonna almost. It's not a standstill because you're still growing the business, but you're still suffering this double, this double penalty of having the corporation, the Sovertiv, still charging you the fee, and you're still investing, and you're trying to as fast as you can, to recover the productivity you've lost from all these changes. Because everybody understands that there's a loss of productivity in this. But the hardest part is that you're doing that with the same team.
Yeah.
And the same team of people that are working on making these changes are the same people that you're telling them, well, now you need to recover productivity very fast. And it's hard. It's hard for them. And on top of that, we subcontract a lot of the production. So you also have to deal with subcontractors and explaining to them and training them and so it's a process that it takes long, and that's why probably most of the private equity companies don't want to get into this kind of situations. There are carve-outs that are simpler than this, and if I was to I guess if I was in the selling position or as part of a corporation, or you're trying to sell an activity like this, I'd say make sure you already create the structure, as much of the structure as you can. Not only because it's easier for the buyer, but also because you're creating value anyway. You're going to sell the company for more if you already create a standalone company.
Yeah.
Whereas when you buy the company, you're going to take into consideration the fact that you're going to have to do all these changes. So the price undoubtedly is going to go down.
Yeah.
It can be a good opportunity. But if it takes 2 to 3 years to actually see the results of that, the investment horizon of any private equity being 4 or 5 years, you're already 2 years or 3 years into the game. You hardly have any time to say, well, let's go and do acquisitions, because by the time you do an acquisition, it's going to take a bit of time before you actually see the results, and then you're on the exit. Which is pretty tight. It's pretty tight in time. So I guess there's no easy way to do this.
No.
I guess unless you obviously have 2 teams managing that. But again, it's too much cost anyway.
If someone was to ask you, what's one piece of advice that you would give them if they were looking at a carve-out situation, what would that be?
To private equity?
Yeah.
I think the due diligence is essential. It's a very critical part. Understanding the impact that those changes are going to have, and how long it will take. I think that to me is probably the lesson learned. In my mind, it was kind of a natural thing because I had done this when I was in Emerson, or for this same company that we acquired with the private equity. So for me, 18 months getting back the productivity is something that's exactly what I lived through when it was part of Emerson. We acquired a company, we merged operations, we moved a manufacturing facility that we had in Tunisia into Slovakia, and it took about 18 months. We changed the ERP, so it was kind of the same project, but it was within Emerson.
In reverse, yeah.
Right. And Amazon being obviously a $20 billion company, and this was a small part of the business.
Yeah.
So, they were okay with it, right? I'd say, yeah, I think from a PA perspective, to look at the due diligence, make sure that you understand the impact that's going to have. And I would say for the people that are within the business, if it's an MBO, make sure you explain that correctly. Don't take for granted that people will understand that process. A carve out, every carve out is different.
Yeah.
I've been working in different. I'm looking now at purchasing businesses anyway myself. So I was looking at a couple of carve outs opportunities, and I can tell you the two opportunities that I've seen between themselves, they are completely different. And they are the two of them are different than chloride.
Yeah.
And they will have their own complexity, whether it is people or whether it is systems, whether it's the markets. There's a lot of things that need to be checked. Contract with customers, for instance. If you have long-term contracts with your customers, most likely, most of them, they have a clause in the contract that says if there's a change of ownership, we reserve to change supplier. So you want to check that.
Yeah, absolutely.
And if that's the case, you want to be very, very upfront with your customers, even though most of these processes are very confidential. You want to be upfront with your customers and explain at least with the key customers, and explain to them, this is happening. We value your business, and the new owner will value your business. So because it can happen. It can happen as when you purchase a business that one of your main customers decided to use that clause and then stop the business with you, and it could be quite painful to replace the customer.
It's interesting that you've now transitioned to looking to buy companies. Changing that, being on the side of carve out and operating, and now looking to be the purchaser. What's changed in your view in terms of that? What have you learned?
Right. Well, it's obviously the projects are completely different. They can already the size of the companies.
Size and scale is different.
The size of but it's deliberately. Deliberately, I've been looking at companies, the size of companies that are probably more manageable for one person, and I'd say my motivation has been to look at a business that I can add value and create value. Also using a bit of that mindset of private equity. Obviously you don't need that. You don't have a tier. All you will have is an LBO anyway. So you have a debt that you're going to raise, and you have to pay that back every year. But you want to make sure that you structure a company, that you make it grow, and that you make that company that you're going to buy successful. So I'm always looking at areas where I'm thinking, okay, what are the companies that will have opportunities for growth? It's pretty hard to get into a business where you're going to have to restructure the business, and at least as an individual. In France, there are record numbers these days of companies that are actually closing. They're going into bankruptcy, and the whole process. So you could probably say, well, you have opportunities there. The whole process of getting into that is a pretty tough process for an individual. If you're doing external growth, or you're doing acquisitions, then that's a good opportunity. So I'm deliberately looking at areas where I think, okay, there's a growth there. I'm also looking at making sure that the companies are already structured somehow. When you're looking at a €5 million company, you obviously don't have the luxury of having 300 people. And if you have 300 people, you have a problem.
I would imagine from a due diligence perspective, there's not the same level of information and data available when you're trying to go through that process.
I get you. I'd say it's actually you have more information, because these are established businesses. As small as they look, there are more information that you have in a carve out. When you look at a carve out, a lot of information is an Excel file. And it hasn't been audited by anybody. They give you the last 3 years of management accounts, which is internal. And within that internal, you can have a lot of stuff. You have one of the companies I was looking at to purchase, which was about 3.5 million euros. an activity of a big group. This group was and this activity was not a standalone, so it was part of a big entity within France. This particular activity was actually the main supplier was the group. There's no transfer price. There's no markup, right? And so they give you a management account saying, well, this is the money they make. Yeah, but tomorrow when I buy this company, you're gonna want to make a margin, right? If you want to make a margin, my profit is gonna go down. So the challenge is when it comes to the carve out is how do you well, you have two challenges: how you already do the due diligence and the structure and create a P&L as if it were a standalone company, and that's pretty hard to do. And secondly, when you're going to go to look financing, when you're gonna talk to the banks about this, you have the same issue as I had in Florida. Give me the last 3 years of accounts. I don't have anything. I only have management accounts, so I can put a little PowerPoint and explain to you what it looks like and what it's going to look like tomorrow. But you're very close to a startup, in that sense. Whereas when you look at a company that's already established, you do have the three. You might have some adjustments to do to the EBITDA, right? But the accounts are there, and the capacity of the company to generate cash. So from a finance standpoint, when you go to see the banks, it's easier because they can quickly assess whether you're going to be able to pay back the debt, and then it's a matter of saying, okay, what are you going to be doing with the company in the future? So you can focus more on the growth, as opposed to on the whole structuring of the company. So now it's two interesting processes and completely different mindset anyway every time, but very interesting.
Fantastic. Well, I mean, fascinating journey that you've been through with chloride and obviously now sort of buying companies as well. And thank you so much for coming on and sharing your stories. I really appreciate it. So we'll tag you in the post of this, so people, if they want to reach out, if they've got questions, they can get in touch. And thank you so much for your time today. I really appreciate it.
Excellent. Well, thanks to you. And if anybody wants to reach out, LinkedIn is the right tool. I'm there.
Perfect. Sounds good. Thanks, Ivan.
Thank you. Talk to you soon. Bye.